Hey folks, how you doing? Canal here, Bulls on Wall Street. Some weakness in the markets this morning, which is good. You can see what's been happening here is that we've gotten just really ahead of ourselves. Pretty extended. I would say that this move has been really bullish, and we're kind of getting into a bottoming type pattern. But going from the bottom of the range to the top of the range without taking any rest is really setting us up for a period where we should consolidate or pull back. And so, really, any type of pullbacks or consolidations that hold in this area, I think, would be really bullish. But on the other hand, we've had a lot of different sectors like oil that were really extended coming out of this flag pattern over here and running into resistance. And so it's made for some good shorts. And you can see oil right now. This is USA, the ETF oil is bear flagging, and you can see like gold. Gold is really getting extended to the to the upside too, and so we've taken some shorts in zinc, and we hit SLCA at the open and Bass, but a lot of these things have just gotten extended. So like our trade in SLCA is a really simple pattern, and that you can see here, like coming off its lows at 13, it runs into about $19, almost into the 50-day moving average, and you're getting overbought. And so, essentially the play is like you see this base right here, it couldn't crack on Friday. And so, as soon as it broke under this level on Friday, we took this thing short based on what's happening on the bigger picture here, which is this overextension into resistance and an overbought condition. And, just sets up for, a really low risk type of short, because your stop loss is just going to go right over here. And so you're going to risk a handful of pennies. And then, like I was saying, gold was getting really long in the tooth also. And so we took a position in dust, really just trading 1,000 shares this thing in the morning. But I love this type of setup because you can see like how extended it is to the downside from 30 bucks all the way down to 13. But today it gapped down. And so what this is called is an exhaustion gap. An exhaustion gap where when you're really oversold and then you gap down, what happens is that's the last like parabolic stretch to the downside. And so what you want to do is, we want to buy into that. And I'm covering up some of the zinc right now, but we want to be buying into that for the potential rubber band long. Hold on one second. Let me just type in my chat room over here and let these guys know I'm covering up some of this zinc. So I love this type of setup. That's our parabolic long rubber band long with the exhaustion gap. A great setup. And so we hit this thing. You can see here at the open when you pop up and then you go sideways for a couple candles here, and you're holding this 13 spot. You can take this as it's coming out of range. And so we ended up with like a 1310 average or so, and not big position size. 1,500 shares was the original batch, and you sell up into resistance, and then if it makes a higher low, you can come back in and add some shares. But really simple setup. And so when I thought that gold was getting overextended, this zinc stock is also kind of the same type of setup. It ran from 225 to $6 in the last few days, and so same type of setup as SLCA. There was a big level of support here at 520. And so, essentially what happens is when this support is broken from the previous day, this is what we call like a day-long consolidation pattern. We want to short into this thing, and it's an opening trade, so it's going to be really quick. And so, essentially I shorted 4,000 shares at 520 in the 520s, and we're covering down into the 470s. And then later on, as it has like this dead cat bounce, you can see right back into its old breakdown spot. We ended up reshorting a few of them, and I've covered up a good half of it or so. I got 513 average on the reshort. I had 3,000 or so around that end. And, a target for the last half will be back down to the low of days. But pretty interesting stuff. The market overall looks okay. We're having a flat day. It's just that oil and gold have been really extended. And so, I wanted to take some shorts into these. And so we traded this Bass and SLCA at the open. And you know, I had some decent profits on it. The day's just getting started, but we'll see what happens the rest of the day. So that's it for now, guys. I'm on screen share all day in our chat room every day. And so we have our chat room, and I'm on Bulls Vision for the screen share that we do for our students for our 60-day boot camp. So the people that take our classes in our 60-day boot camp, what we do is, you know, we teach class 4 days a week live, and then during the day we have this screen share up and things like that. And so my students are watching me click these buttons, like just like how you are. They're watching me take the trades and click the buttons, and I'm walking them through exactly what I do. It's pretty cool because, you know, there's learning via book knowledge and during your class and your course book and your homeworks, but then you got to go out and see somebody do it live and really have so you can have that confidence, because when things are moving around in real time, it's a little bit harder than seeing it static in a book. And that's why I believe that you can't learn trading from trading books, because it's easy to see something in a book, but when this is happening real time and these numbers are all moving around and you're seeing, you know, all of these things kind of filter around, well, it's much easier, or it's much harder to do it in real time, and, you know, actually be able to act on these things and see the patterns before, you know, they're confirmed, so that you can really anticipate them and things like that. And man, this BCI, I missed this short today. It's so annoying. Same type of setup as SLCA. You can see here, you know, when it was cracking support from the previous day. When I saw it, it was already too late. So I did SLCA as essentially like a sympathy on it. But man, these things really, this is what happens when you get these things just so extended. And often, you know, it's the support areas from the previous day that can act as the crack spots. And so it's kind of cool to always look at a multi-day chart when you're intraday trading, so you're not so focused on what's happening just on the day that you're trading. You got to see what happened the previous day. So that's it for now, guys. Let me know if you have any questions, and take care.